Hello, it's Cryptolyze. I hope you are well this Saturday, December 9, 2023. We are together today for the weekly, where we are going to come back to this week talking a lot about macro anyway, because we had the figures which fell at the employment level, which still give us quite a few indications. And we are really at the crossroads of a very particular situation at the macro level, and which could have a big impact on crypto. And we start the explanation right away. Following. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress. We have just ended another week in terms of the US macro, which is rather positive. We closed above the previous candle. We still see a small inflection in prices, but that's not the most important thing. What is important is really the reaction of the courses to the news that has been given. And there we have some concerns. Clearly, the big news is that we had a PMI that was rising again. Once again, the PMI is the representation of business beliefs about the American economy, okay? And we see that when it goes back above 50 and when it continues to progress, that means that belief and therefore hope returns. And this is very important because precisely when we are below 50, it is generally a very bad sign. And there, we go back above positive 50. Next to that, we have the unemployment rate, which is falling. We had waited at 3.9, we arrived at 3.7. We will come back to it, don't worry. And yet we still make a small candle, which is certainly good above, but which is not extraordinary either. For what? Because clearly next week we have heavy things. We have big heavy things in the calendar. We know that next week we are going to have the CPI for November, which is going to fall. We are going to have next to it the producer prices, which are going to fall. We are going to have the FOMC on Wednesday, 13 December, really worth noting on the calendars. And then we are going to have Thursday. We are going to have a lot more news. So the market is mainly waiting for this news, and also waiting for the sell-off at the end of year. It's rather classic. We have the account closings. We have behind the profit taking on the different investment funds to be able to prepare next year's brochure. So we are in this process, which is completely normal. We still have a little time. Generally, it's really the last half of December, so we still have a relatively quiet week in which we could have news from the Fed. The Fed, yes, but is there still a real impact at the Fed level? So that's the big question you have to ask yourself, because for me, I think we have less and less impact from the Fed, because they have defined that they are data dependent. Data dependent means that they will look at the same thing as us to make their decisions. So we have the ability to anticipate more or less. In any case, the market thinks it has this capacity, and therefore we have a form of hyperpricing taking place. Except that we forget something important, which is that there is always a latency effect between the data, the reaction of the Fed, the action of the Fed's actions on the market. And this is where we risk having a little quack that will set up. So we're going to come back to two things. One, yes or no. Are we potentially going to have a hard landing? Are we heading towards a soft landing? Clearly the figures are currently heading towards a soft landing, except that technically we are still seeing things. So yes, we can already see that the SPF 500 is still having a lot of trouble there despite the good news. So we must not hide that the SPF 500 is driven mainly by tech and on large sets. We are also not going to hide that it is this company which is currently driving the market. So I think that I could also give you a video on the notion of concentration of wealth which is taking place of hyper-centralization, whether banking, whether at the level of large sets, so that there really is a concentration of wealth and technologies around a few large companies which drive the market and the impact that that can have. Because clearly we have a stark dichotomy between the big sets and the rest of the market. When we look a little at this charter which represents the SPF 500, in which we subtract the monetary printing, therefore which is the representation of the SPF 500 in pure value by removing the monetary injection, the monetary printing that there was able to having in the different cycles, we see that we are in a zone of resistance which is very strong. I have already spoken to you about it in the daily newspapers. If you don't follow the daily, it's a shame because I explained that to you at length across the board, the importance that it had, and that systematically when we arrive at these points of overheating, well, we have a break bearish. We've already had it once, twice, 3 times, okay? So systematically, we have certain cases that arrive and which are very, very painful. And precisely here are we going to find ourselves in a breakup, which would be rather positive. It means change. Drastic of the economic polarization of the market. That means that there we would potentially enter into a hyper-centralization of the market. And that's another video, I think. If you're really interested, put it in the comments. I think I will, because it could be a video that could be a little long. It could easily be a video of 45 minutes, 50 minutes limit. We could even do it live, why not? It's up to you to tell me what you think about it in the comments. But we would enter a cycle of hyper-centralization in which we would necessarily have a rebound here, and then we would start to rise again. That means that we would have alongside a valuation with a reduction in monetary printing. A valuation which would be certainly supported by around 10 actors maximum. Yeah, we will say maybe around 15 actors. And therefore we would have a divide which will be put in place between small companies and large companies, in which we would have a very strong impact and therefore a very strong increase in inequalities also in the American economy, which would have a huge impact. So on this, it is also seen a little in relation to the dollar. We had a big rise this week in the dollar while we had an SPF 500, which was rather stable. Small candle. And there we see that we swallowed the part of last week's candle. Plus we closed almost above the one before. All right? So we're back to roughly the equivalent of mid-November in a single candle. So that's interesting because it means that we still have a certain appeal on bounds. We can also see that this week we have swallowed part of the American Treasury bonds. Okay, on the rate of American Treasury bonds. So here we have a market concern which is taking place, hence the seeing monetary transit coming. And at the same time, what is interesting is that I told you that we were going to bounce back and potentially retest this level of resistance. And what is also interesting is that on the Euro USD, we arrived at a fence right on the nose. The desired place in the very strong resistance zone. We made a small liquidity grab, but we made this nice rebound to potentially create bullish continuity. So for me, we are going to have a bearish continuity. This implies that we are going to have a bearish continuity, therefore a reduction in the pressure on the American economy. Well, on the other hand, it's not going to happen right away. You have to understand that it's 6, 9, 12 months before we really see a change in the American economic cycle. But in any case, we're really starting to notice this. Does that mean we're going to be in a soft landing? In any case, everything is heading there. On the other hand, there are two elements which are still not validated for me. In fact, inflation means that inflation is still largely driven by the fall in oil prices currently, therefore which gives us this ability to be able to show that we have inflation which is falling. But clearly, as we could see it in the various news this week, we have OPEC and OPEC which are in the process of being put in place to certainly drive the price of oil higher. In any case, when we arrive in this zone 2, generally we are bought to go retest the upper part. Are we going to retest the 83 or the 90? That's really the major point to have. But that means that we are going to have a slightly inflationary cycle. And if that ever correlates with a drop in rates, or at least a reduction in pressure on the American economy, we could have an overreaction from the Fed. And so we have to be careful about the overreaction of the market. Compared to that, the other point that we will have to watch is here in the middle of the unemployment rate. We had very good news. We moved to 3.7, okay? On a forecast at 3.9 and potentially even above, it's looking for the 4.41. And we went to retest the 3.737, which is interesting to see, is that it's the level we had in May 2023, and therefore we are in a phase of retesting this part. Is this something we have already experienced? I want to say yes to you. Same here, case on bullish, retest. For those who do AT, well, that speaks to you. For me, we really have two levels which are important because we are in an accumulation zone, so either we manage to continue to tidy up in this part, without breaking behind the 3.5, and without breaking the 4 on the other hand. If we break the 4, we will have a clear fear of a risk of recession which could arrive. And a contrario, if we break the 3.5, that means that we really have a validation of soft landing. And in any case, even if we break, if we retest the 3.5, it means that we have a consolidation which is done below the 4 as long as we hold the 4. That is, we can hold it in the long term. Despite the fact that, in fact, we have a hollow that is being made between the companies that are currently driving the market and the American economic reality, because that is a reality. We have real estate which is still falling, which is having a lot of trouble, and that it is the American economic engine, that we have all the companies which are not overall the top 20, top 30, top 40 of the American economy. And when we look at the Russell, we see very clearly that it is having a lot of trouble. And so this shows that we have an economy that has two speeds. Usually when it's like that, you can have a breakup, a rupture to know that we could also have it in American politics, which is going to happen. Obviously, we have the elections in 2024, which are important for cryptos, but also for the American economy. Understand that there are a lot of things that will play out here and a lot of instabilities that are likely to happen. And therefore, that also potentially means risk management for the different economic actors, therefore institutional ones, in relation to this political news. Clearly, what does this mean for BTC? There are two things. That means that we are in a phase of stabilization and uncertainty in the market. Next to us are the risks which are always present, and in the distance, a light in the tunnel, which in fact is getting closer little by little. So there we have this phase of uncertainty. This phase of uncertainty is pleasant for those at risk because, precisely, when we are in a phase of uncertainty, that is where we will continue to take a little risk. Because we know that we cannot continue like this for long, at some point we will have to lower rates, and that we are still in a cycle which is relatively upward, driven by a certain number of actors, but still in an upward pressure. And so that also means that we are in something that is favorable. For me, even if we have a crash that could happen, therefore, with a fall on the S&P 500 which could be caused, notably here, and a breakout which could potentially lead to a retest of the 4,350, or even why not 4,100 once again, or even why not a little lower, depending on the American economy, depending on the political risks that we might have. Well, that does not prevent me from thinking that the risks on BTC will be fairly controlled, at least as long as we have not the construction of derivative and complex products in which we have BTC, something we had at the end of 2021 for which we had a very strong bearish breakout and a very strong correlation between the two. Will the arrival of ETFs change anything? I want to say yes to you, but it won't happen right away. It will take a little more time for that. You have in the description and comments the possibility of downloading my strategy guide on investment and trading in cryptocurrency, in which there are 30 pages to know everything about how to proceed, how to benefit from this bull run. And in addition, in description and comment, you also have the possibility of having access to our newsletter, which is available and which will be available every month. The links are in comments and descriptions. So we're really going to focus on BTC now. And in terms of BTC, we closed a big week. Really a big week, which corresponds to the week we had in October 23. So for me, it's exactly the same type of week in which people were surprised, myself included, especially in the second acceleration. We had the first acceleration, we had anticipated it at the end of Sunday, beginning of Monday. On the other hand, that of Tuesday morning, I admit to you that we were taken by surprise with such a strong acceleration in which we had no delay at the market level. We did not breathe. That's ire that we breathed for a few hours, and then we accelerated again. And there we really entered a rather classic lateralization phase. So for me, I'm going to come to this comparison with what we experienced on this acceleration here. Okay, acceleration of October 23, big acceleration, breathing of the market. And there it is, precisely the same principle. That is to say that we have a big acceleration, temporalization of the market, and I think that we are going to have the same bullish grinding pattern. Why? Because we are still in the same problem. That is to say that we are in a movement which is mainly carried here by this candle there, which is the fake news candle. Okay, and rumors of ETF validation. So we are always in this narrative, and this narrative is always in a notion of buy the rumor, sell the news. And so we will not be able to have a change in the movement until the news has broken, or in any case, until we have validation, without us knowing it. But in any case, an institutional validation, the arrival of the news. And so that's why, for me, there's no point in thinking that we're going to have a turnaround. People tend, when we start to have a second acceleration, or when they are surprised by this acceleration, to say to themselves that, from this acceleration, to say to themselves that we are arriving in an oversold zone and we will start to turn around. What type of speech was also found in this part? We are in a bullish flow. We accompany the flow. We are in a lateralization. We hold the lows. We do not forget that the lows are very present and are held here. We always have our protection. Yes, we did a little hunting for liquidity, but all in all, we are holding on. And on the other hand, what are we breaking? We're breaking the highs. So for me, we are still in this process of grinding which will take place, which may have small hunts for liquidity. But overall, we will in fact create a zone of lateralization. This lateralization zone is essential for walking, because it is a form of breathing. And as I explained to you, Very quickly, as soon as we arrived here, I told you, be careful. You'll have to look for the alts. Very good, because what do we see? When we look at dominance, we have had the candle of dominance completely swallowed. We see that we have a small alt season classically. BTC is growing, alt season, the alts are also growing, and therefore we will be able to have a new bullish phase at the level of BTC. So on that, you say to yourself, okay, but wait, you explained to us that there was going to be a sell-off at the end of the year. Yes, on the traditional market, that does not necessarily mean on BTC. Are we going to have an impact on BTC? Yes, we can have one or not at all. If we look a little in the past, then I will try to create a graph that goes into the past. We will look at the different months of December, and you will see that we can have months of December, which are quite aggressive. When we look at 2020, we see that the months of December were rather positive, especially when we had an acceleration before. And that's what's important, is that we still had a good acceleration before. So it is possible to have a month of December, an end of December, which continues to grow. Go get the objectives that we have, which are 48,000, 52,000 we have already discussed. Go get this top of Terra Luna. Go get the liquidity, which is above. Here we have an equal high, which is very present and which is very nice with a hunt for liquidity at 618 to then potentially have either news at the level of the ETF, whether why not a refusal to redeposit behind and have a validation later, or whether it is a validation and therefore either an influx of liquidity, and therefore why not a pre-all run, which is ultra explosive, or something which is totally different. Therefore, a sell the news in which we will have a strong breathing of the market to arrive at the halving and prepare, in fact, at the end of October, at the end of 2024, the establishment of the real bull run, which is in fact part of a rather coherent cycle. Certainly we have not enough data to be able to define that it is the same cycle all the time, but that is the reflection that everyone has. Well, everything is relative. All those who take the time to have already experienced one or two cycles and to concentrate, which is already enough. Few people, we agree, the majority currently here are in the process of FOMO totally without saying that potentially we can retrace. Okay, so risk management is always essential in these bullish movements. We is not against the upward movement. We accompany the upward movement. We just systematically think about what is happening. If I am wrong, if we break down, am I prepared? Do I have my stop-loss? Do I follow? Not overexposure, is that everything I've been telling you for 2 years overall of this chain, which are really important in surviving a bull market, surviving a financial market, because it's good to make gains, but it's better to cash them in, obviously. So to come back to BTC, for me, we are in this phase of lateralization. We can potentially stay until the end of this week. Why not the end of next week? But I think we will have a new acceleration. Who will arrive? And why not this end of the year, which ends once again with a very big acceleration. The two things to note in terms of open interest is that we have a small question of open interest to note. There we note it. It can't say anything for the moment, but we note it on the fact that potentially we have a small profit, but which is consistent with what we have already known about the different accelerations. All right? If we look at the acceleration that we find here, we can clearly see that following this acceleration, we have a drop here in open interest. Then we leave again. All right? So we'll have to see, are we returning to the same pattern? Are we really in this bullish grinding pattern? Which seems rather consistent compared to the market's surprise on the second acceleration we had this week. Another thing that is important is that we have a movement which was mainly driven by the CVD, which is also rather consistent with the upward acceleration that we had in this zone. Here we have a real breathing of the CVD spot with a real break, which we also saw here in this grinding. Okay, bullish acceleration, grinding at the price level, and therefore behind us we have the CVD spot which is sinking, which is rather classic. So we have a breathing of the people who are in spot, therefore a reduction in the aggressiveness of the market. And next to it we have a similar perpetual CVD which breaks it bearish, and then potentially starts to rise again, as we could see here. So we have bearish, restart, and then re-acceleration. So for me, it will be a pattern that I will look for. For me, we are in this zone there. We are the equivalent of this zone there. So for me, we should have a second thing. Then have a break with a little hunt for liquidity. And then we leave with here an inflection at the level of the CVD, where we see that we are starting to have a CVD which regains a little strength, and a second acceleration to see something which should start again, if ever we have a movement that lasts long enough. Time to have these patterns, obviously. We can have something that can be much more reactive and break upwards quite strongly, and we can clearly see that liquidity is being rebuilt. So for me, we are in this approach which is almost identical. Yes, we are arriving in an area which is important, which is here. The areas between 0.5 and 618 are known to be sales areas. We're just prepared. On the other hand, it is not because we are in the sales areas that we will necessarily be traced. It's just that the risk of returning is greater. It all depends on your risk management. Are you supporting the movement? Are you still providing support? And are you prepared if there is ever a retracement? It's still actually the same schematic. I think that for me, and to close this video, we are in a phase which is really classic, which is the pre-all run phase, in which we start to have an upward dynamic again. We start again to have an interest. We start again to have a financial flow which comes into cryptos. Alongside, we have a macroeconomy which itself is starting to have answers. And I really think that we are not far away within the next 12 months. We will have a big answer on the American economy, and we will also have a big answer on cryptos, whether at the level of regulation, whether at the level of political passage, and the political uncertainty that can be found at the level of cryptos. In the USA, and for me, everything will be decided soon, and that's why I keep telling you that we are at the right time, because that means that we are going to have regulations, which will be at least more understandable, and at best already more permissive agreed. Because when it is regulated, it means that there is a reduction in risk, so that means that we have new institutional players coming in. That is to say that we has new capital, a new typology of people, something we want. Really into this notion of mass adoption. I hope you liked this video. If so, don't forget to leave me a like and a comment. It really supports the channel, and above all, it makes me happy. And we'll see you tomorrow at 8:30 for a new video.